Today I'll show you how you can use ChatGPT and other AI models in your algo trading. Most people have an expectation that using AI will simply print money for them, but we're not there yet. Last week there was a huge USD move that caused aggressive euro-dollar and Aussie movements, and many EAs experienced huge drawdowns. One of them was FX Stabilizer, which is a robot that I was making a lot of money from. And obviously the easiest thing to do is simply give up, refund it, and look for the next one. But if you make money with one EA and something happens, don't give up on it. Rather, take a moment, figure out what went wrong, and learn from the experience. Let me show you how to do this. So this is the $5,000 live account where I requested $1,000 withdrawal one time, second time, third time, fourth time, and I was trading all 8 currency pairs. But at that moment, on the 26th of January, the euro dollar and the Aussie dollar experienced huge drawdowns, and because of the protection in the EA, I've lost most of the capital in the account, and then I've withdrawn the rest. In another $1,000 live account, I was trading 4 currency pairs. However, this is another proof for me that requesting withdrawals regularly prevents losing the initial capital. So let me show you the accounts I have left where I'm trading the FX Stabilizer. If I search in the funded accounts, you will see that I still have the trading.com account, which is on the second stage. And if I show you the track record, you'll see that I'm also trading the 8 currency pairs here, which obviously has been very risky from the beginning, but it steadily climbed towards the first target. I've requested $1,600 as a payout, and then I've made some more profits. The account reached nearly $21,000, but then I had this drop in the balance because here I'm using 10% risk in the account. What that means is that with every asset I have set a drawdown control to true and a risk limit of 10. However, both Aussie and the euro experienced this huge drawdowns. At this moment all the trades were closed. Very similar thing with the euro dollar, where it just broke the 120 and then it reversed, which caused all of these losses. And if we had a little bit of a luck, we might have recovered, but you can see that all of the trades were closed right before the dollar reversed. However, in algo trading we should not hope on luck. That is why with my team we did further analysis, and I'll show you in a second that even the 10% is not really the best option. I also have 3 more $1,000 live accounts. From the first one I have requested a withdrawal already of $200. With the second one I am above $400 on a profit, and with the third one I am $168 on a profit. And some time ago I figured out that it's just smarter to trade individual pairs in individual accounts, because if you just start trading the FX Stabilizer or any other grid martingale system that trades multiple currencies and you put in a big live account, if one of them fails, if one of the pairs fail, and in this case we had 2 failing simultaneously, which is really rare situation, but as we saw it happens, if that happens to you, you would lose most of your capital. But if you have each asset in a separate account, you would be losing 5 times less, because my rule is that I stop trading at 50% loss. So if it was 5k account and we lose 50%, that is $2,500 of a loss. But if we trade 5 $1,000 live accounts and we risk 50% from each one, if one fails, then this is $500 of a loss, which is 5 times less than losing $2,500 at the bigger account. However, some from the team did further backtesting, and now we'll check together what the results show. Okay, Sam, please, can we see the backtest results after this crash last week?
I've summarized the results in our spreadsheet. So I've basically backtested each of the 8 currencies on 4 years on a $3,000 account, and I've used, rather than using their auto risk, I've used the fixed lot size, and I've used the smallest lot size because that's going to be the safest option.
Okay.
and we'll see how we go, because we also know that they've said using the lowest risk, we shouldn't trade, or we could potentially lose. I think it was nearly $1,500.
And that's why we said we should be trading eventually in a 3K account each pair, because 1,000 is too risky.
Exactly,
right?
exactly. So I'm basically trading the smallest lot size on a $3,000 account for each, and I've back tested that right up until the recent date. And I've summarized results here so we can see the net profit, the maximum drawdown, and then with this minimum lot size, what we are likely to make as an average monthly profit.
So none of them actually makes 2%.
None of them makes 2%, which is obviously what we like to aim for. But this initially does let me see that what looks like the best ones are these three pairs that I've put in bold. This one also makes maybe 1.2%, but the safety factor is a lot less. You can see I use this annual return over drawdown to kind of get a feel for what one is going to make the most monthly profit with the same risk. So essentially it's these three here.
Well, we have the Aussie dollar, the dollar CAD, and the dollar yen.
Yes. Now, obviously, this one's just burned us, but as we've spoken about, that doesn't necessarily mean it's bad. They all have their time.
And as we said many times, the best moment to start with an EA is after it loses.
Exactly, not when it's been profitable for ages. So if I've got the reports here, and we can just get a quick overview. So that's the Aussie dollar here, and we can see this recent crash in the back test. Now, it doesn't look like a huge crash here, and that's because we're trading on the $3,000 account with the minimum lot size, right? We were obviously trading with higher risk, and we were trading 8 pairs, and also the euro dollar had a hit as well. So we not only had a worse drawdown than this in our account, but it was combined with the euro dollar. So that's one of the better looking pairs. I mean, the recent drawdown aside, we can see it's had a bit of a drawdown there, and it's recovered nicely, and this is the first time since.
It's a bit of a bad luck trading it right now.
Yeah,
because it's been really profitable in the last 4 years.
Yeah, it has. And we also, for a while there, we were seeing the FX stabilizer that could do no wrong, because we started trading all 8 pairs around this period. And if you look at all the tests, I think we started trading it around this period and, this period. So we kind of had this great run where they were all not having their bad spell, but over a longer period of time, they do have these dips. Now we can see they mostly all grow, but this one looks pretty good. This one less so.
PCN doesn't really.
It doesn't look like something we really want to choose to include in the portfolio.
I think it was.
If I quickly check the live accounts where we have the FX stabilizer on 3 pairs, it is exactly the Swiss yen that makes nearly 7% a month. We've requested a withdrawal, but it's just because it's this profitable phase.
Absolutely.
Right,
so that's why it's important to do both, to back test and use your results. We've been in that good phase. This is another one of the pairs that generally does look pretty good. The USD JPY is pretty good. It does have a few knocks, but we can see there it's had a few knocks in a row, and it has recovered for a higher high. The euro, that's not bad. It just has a big hit, and it's not recovered.
This one had just one drop. Euro pound.
Euro pound. So, I mean, that also does look like a tradable pair. This one's been pretty stagnant for a long time. I don't tend to like strategies that have been stagnant for so long. And this also, the euro dollar, it's been pretty good. It's had a hit. It almost recovered, and then it got hit in this recent kind of move too. So I've not included it in the top 3. This one here obviously has had a huge drop, and that's got a long way to recovery. So I can see how, again, we're trading it, and we traded it through this period, and we can do okay. But there has been a fairly massive move that's caused a big problem. And then this is the USD CAD, which is possibly even the best one. It's had a couple of moves down, but it's been pretty steadily going for higher highs.
So what I see from all of these backtests is that all of them had their drops. They've closed the recovery trades at one moment, and some of them did it a few times. Can we put the 3 pairs you selected one over another so we can see if they happen at the same time?
Yeah, we can. I've actually done this in a different way, but I'll show you that first of all. So if we look at this one, for example, when we save the reports, of course, we lose the equity, which is the green lines, and that's what we want to show here. It's perhaps easiest just for 2 pairs for demonstration, and I'll show you the way I've chosen to do it. You can kind of get a feel this way. It's a sensible idea. We can kind of get a feel when we see the green lines. Basically, really the hope is, if I go back to the spreadsheet, we're looking at these as individual pairs, and we're seeing that we can't really make our 2% a month that we kind of like to aim for an account, because if we're not making that, we might as well invest in something else, really, is the idea. And it can be a little bit less, but 2% is pretty safe. It's worth it. And so we're not really making that from this. And we've got a couple of options. One is to double the risk on these. So if we doubled the risk to 0.02, we'd of course double this monthly profit, and we'd get our 2%. But I always include a safety factor, and that safety factor is basically just calculated by how far our actual worst backtest drawdown is from what our acceptable drawdown is. And in this case, for all of these pairs, we're basically going to be left with no safety factor. And we have backtested over 4 years, so the safety factor doesn't need to be massive, but for me to reduce that to even as low as maybe 1.2, which would be the lowest I'd ever go, I'd probably want to backtest this on several brokers, and the drawdowns all to be pretty similar. It's a bit more involved and kind of probably unlikely to happen. So I do like a pretty good safety factor there.
So option number one is we trade them separately in individual accounts, but based on the backtest, we won't be getting 2%.
I don't feel super comfortable. Yeah, it's we'll get maybe about 2%, but we're basically right on the line of our risk.
Number two is we increase the initial lot to 0.02, but then we will be on the edge of the max equity drawdown.
Exactly.
Right?
Yeah, exactly. That's right. But we've got further options. So the next option, as no doubt you were thinking ahead there, is that, well, maybe if we combine some of these pairs, so if we combine these top three, for example, and this is exactly what I've done, if we combine these top three, over the 4 years, our profit's not going to change. We're trading 0.01 on the account, and our profit's going to be the sum of all these. So obviously, instead of our profit being 1.1 and 1.34 and 0.88, it's actually going to be 3.32, as we see there. But what could happen if we don't do some kind of analysis here is we kind of assume the worst thing is maybe all these drawdowns happen at the same time, which leaves us in the same position. We're going to have no safety factor. But if these are uncorrelated pairs, or if the worst drawdowns don't happen at the same time, like you say, if we look at the charts, and this is where we kind of maybe got a little bit led astray by the vendor, they just kind of blindly said, oh, it's unlikely that pairs will have their worst drawdown at the same time, and we just saw it happen. Now, we've chosen only 3 of the 8 pairs. They look to be reasonably uncorrelated, and if we look at the graph here, we can kind of see that it looks like, we wouldn't want to see, for example, this, which is the worst drawdown of this one, corresponding with, say, if this moved over here and it was at the same time.
But because trades are opening at different times, it's very actually hard to...
It's a little bit hard. So, we can probably get a feel reasonably quickly from this one by kind of, if you want to do it reasonably quickly, you can go, okay, well, this was 2504. As long as this isn't 2504 and this isn't 2504.
Okay, so what's the best way to figure out this? We can trade them in a portfolio in one account.
Yeah, so this is what I did. I'll just pull MetaTrader onto the screen quickly and just show you. So when we save a report, I typically save this report as a backtest, as this HTML file, right? I right click here, save the report. And that's what we're looking at here. But we can see that we lose the equity.
Right.
To actually save that equity, you can go to this graph here and export as a picture. But I also recently realized that you can export to this text file.
Which exports the equity values.
Exports the equity, right? So that means we've now got the equity, and this is where AI can come in very handy. And I'll show you how I used it here. Basically, I took these 3 CSV files that we have, and I imported them into ChatGPT. I used a pretty simple, this is my prompt. I attached the 3 strategy backtest results with equity over time backtest on a 3K account. Can you give me the combined results for total profit, max equity drawdown, and average monthly profit if they were all traded together? What that then does is it's saying, the total net profit, as I said before, we can see on the spreadsheet, it's calculated here as 4776. If we just net back to the spreadsheet, sum those up, 4776, that remains unchanged. But we can see here, because it's got the equity, it's actually showing that the worst equity drawdown in dollar value is $958. So we can see that really we're not having big moves on all 3 at the same, right? We've clearly had probably the Aussie dollar or something has had a big move, and these have maybe had 2 small moves, but historically historically we're not getting those at the same time, which means if I then take this further and assume they're all trading on the $3,000 account, I can update the numbers. I can go, well, we make the same profit. We've now got our maximum portfolio drawdown.
Which actually ChatGPT calculated.
Which
precisely.
ChatGPT calculated precisely for us because we've given it all the data. And so now we can see that we're actually able to make on that $3,000 account 3.32% a month. And not every month is going to be the same, but typically these are pretty linear systems. And so 3.32%, which is above our 2%. And we've got a reasonable safety factor there of nearly 1.6. So I feel reasonably comfortable that, you know, even if I choose a different broker that I backtest and stuff, I feel pretty comfortable that with 4 years, that's looking like some reasonable risk management.
And then you've backtested if we trade it on a bigger 4K, 5K account. So we'll have some more margin. And
I'm always assuming with this, it's not compounding. So I'm always assuming that we're making money off of this and we're withdrawing regularly. Right. I'm assuming that, you know, the 3,000... 3% and we withdraw and it's a monthly thing.
But in this case, the bigger the capital is, the lower the monthly return will be because we are trading 0.01.
Exactly. But the more margin for the bigger that 50% drawdown is, so we have a bigger safety factor before we kind of go, well, we've exceeded we've got to, you know, pause trading and kind of take our losses. You know, that can be a happy medium. It depends on the individual's risk appetite. I feel comfortable there, but if you're not feeling so confident in the system, I guess you could use the same sizes and go on 4 and 5 again. And they seem appropriate. They still make a good return and they've just got a bigger safety factor.
So that's option 3, isn't it?
Yeah.
Put the best 3 pairs in one 3K or 4 5K account, but we can trade them together because ChatGPT shows that the max drawdown is not even $1,000.
Yes. Yeah. That's a good option to me. And so yeah, I think.
And what it's below?
That was a further option. I basically looked at what might be the best 2 pairs. You know, I looked at there's 3 here, so I looked at what the best combination of either Oz dollar, USD CAD, or there's 3 possible combinations if you just trade 2 of them essentially, and it turned out to be Aussie dollar and USD CAD, which brings the risk down a little bit. So you can see here that for a $3,000 account, you make about 2.5% a month trading just those 2 pairs, and compared to the 1.56 safety factor, it's closer to 2. That's another pretty safe approach. And also you've got the fact that you're only trading 2 pairs versus 3.
Okay, I see where you're going. So what if we combine the 3 live accounts that we have and we combine it into one 3K account and we put this portfolio, and then the lower option, the portfolio with the 2 pairs, we can put in this Xrading account.
Yeah, I think that's a good option because also the drawdown's lower here, and obviously we've taken a hit with this recent move, but we've still got a bit of drawdown left. So yeah, let's go less risky for the Xrading. That makes sense.
Yeah, okay, that makes perfect sense. Okay, yeah, let's do that.